If your business falls into a high-risk merchant account category and you're doing research because you want to apply for a merchant account for your company, I'm going to talk to you about the top underwriting considerations and just things to be aware of when applying for a high-risk merchant account coming up. So this is another video in a series on high-risk merchant accounts, and if you haven't seen the first video, it lays a good foundation for things to think about and considerations that are going to go along with these application requirements that I'm going to talk about in today's video. So if you haven't seen that video, click the link on the screen or in the description and you can watch that one as well as this one. Remember that when considering a high-risk merchant account classification, there's prohibited merchants and then there's restricted. Every merchant account provider will have different requirements for those different lists, so I'll link them in the description. But prohibited means it's a no-go. You're not going to get approved. High risk is also known as elevated risk or higher risk merchants. And that means that you definitely can be approved. You just have to find the right bank, the right merchant account provider that will underwrite your business properly and get you a stable merchant account. And that's the topic of this video today. So we're going to talk about all the things that you need to consider when submitting your application for approval. And I'm also at the end going to give you the actual things that you're going to need to supply to the merchant account providers when your application goes in. So with that, let's get started with the list. Number one on the list is to prepare what's called a full packet, and that's what we would refer to it as. And what does that mean? Well, it just simply means that you're going to make an entire presentation of what your business is selling, how you're selling it, and everything that I've covered in the previous video and the rest of what I'll talk about today, including the items that you actually submit. One of the best or the biggest significance of a full packet is that you're going to get a stronger foundation for your merchant account because you're essentially opening the book. So you're throwing all your cards on the table, letting them know, letting the underwriters in the bank know, about your terms of service, your policies, your refund policies, how you're selling, what you're selling, how much it's for, and everything. So a full packet is quite the opposite of what you would find with a Stripe, Square, PayPal, all of the payment aggregators, which are instant approval. A full packet is gonna be submitted to an underwriter, and underwriting is gonna take sometimes anywhere from 5 days on the very low end up to probably about a month for a high-risk merchant account. So a full packet, as you would imagine, gets a little bit in-depth with the information that you're supplying, and it takes a little bit of time for the underwriters to review it. So number one is submit a full packet to underwriting. Number two is to put your best foot forward. So you'll see again that some of these overlap, but there's specific nuances to each of these. So in the previous video, I talked about optics, and putting your best foot forward is the optics of how you present not only to the customers, which is kind of what I focused on in the last video. This time I'm talking about the optics of how you are presenting your business to underwriting. Sometimes you get one shot with an underwriter to give them everything actually as it is with your business. So the important part here is going to be make sure that you have your ducks in a row. If you're selling one way, you have order form page and you're selling continuity, let's say. If you submit the packet that way, you don't want to change your story mid-application if it's not true, and then say, oh, well, no, I was just, that's not really how we do business. We actually just sell one-off products and it's just a single purchase because, and I've seen that before where businesses will try and retract and say, no, that's not actually how we're going to do it now. We changed and this is how we're selling. And it's all in the middle of an application process that almost is worse than presenting. It's worse to change the story in the middle of the application process than to have everything set up. So again, all ducks in a row. Optics are important. Get everything presented with that full packet together and submit it the proper way and the right way. And a merchant account professional should be able to walk you through that process hand in hand so that you're getting the right information in. If they're not doing that for you, I would consider finding someone different or a different company. Number three is be truthful and don't hide things. So behind every submission of a full packet and an underwriting packet that goes into a merchant account provider, there's processes in place. The banks have their guidelines. And by the way, it's not the processing companies that are making the decisions. It's the processor that puts all the documents together, and then every merchant account processor will have a bank behind it, so to speak. So it's a sponsor bank. That's the bank has the underwriting department that's making the call, and that has these high risk merchant account guidelines that your business is going to fall into. So behind that entire process are human beings, and it's a person that's actually looking at your packet, and they're interpreting the data that you're submitting and the story that you're giving to the merchant account professional and throughout the application process. So again, that's why putting your best foot forward and getting things in line makes sense, because it's a human at the end of the day, and it's another person who's gonna either buy your story, quite frankly, or not. Okay, and I'm saying it that way because there's so much variation sometimes in really high risk merchant accounts that giving the proper information and the accurate information up front is really paramount. It's really, really important. So again, just having that, keeping that in mind is going to be important for our list today. Number 4 is don't apply everywhere. Don't go out and submit your application to 5 different banks and just hope to get the best one, because there is such a thing as an excessive application turn down, okay? And that does happen. If you've submitted your application, and especially if you've submitted only partial docs, or you've not done a full packet, as I mentioned, and you get turned down because you have multiple high-risk variables, you're going to get turned down with company A and B, and then now you're on to company C, and it's almost like you have 2 other dings on your business credit because you've already applied and gotten turned down. So this is where I would reference back to sometimes you get one shot with it. So what's the cure for that, or what's the better way to do it? The better way to do it is to find a company that will have you submit one application that has relationships with multiple banks and multiple underwriters, so that your credit is not hurt as much when the initial packet is supplied. So there's plenty of providers out there, as we're talking right now, that will write your company, whatever you're selling. You just have to present it the right way, as I'm showing and demonstrating, and you have to find the right provider as well. So again, there's links in the descriptions. You can reach out and talk with me or my team if you'd rather just talk with someone. But all of the order of importance for all of these things to present it the right way to the underwriting, again, is important. Number 5, credit will be pulled with every merchant account, with every application that's submitted for a merchant account, especially a high risk one. Credit is checked, credit will be pulled. They'll take a look at that because the tax liens, the liability risk, all of that matters. So credit will be pulled, and they'll take a look at personal credit of the signer. Number 6 is that getting approved will supersede the rate conversation and maybe the terms conversation. So I just have to touch on this because their rates are obviously a hot topic, and rate and costs are important. I'm not trying to diminish it, but there's a difference between getting a really, a good rate for a low risk merchant account and a really good rate for a high risk merchant account. So CBD merchant accounts, for example, are very hot right now, or very common right now in online and retail businesses alike. And a CBD merchant account is going to be much higher than the average 2.5% or 3% for a low risk. They're going to be more like 4, 5, 6%. And again, that depends on the provider, but the risk is much greater, and the bank classifications for CBD oil merchant accounts are much, much different. Okay, so they're high risk merchant accounts, as you heard me say before. So that's why having that proper expectation of getting approved, getting a stable merchant account is going to have to be more important than getting the lowest possible rate. Number 7 is the possibility of a rolling reserve, or a reserve money on file. So what that means is that during the underwriting approval process, the bank might approve you with a rolling reserve, which means it's a percentage of your total monthly volume. Let's say you're applying for $100,000 of monthly volume, and you could substantiate it and you have money in your bank account, but the risk level is such that the bank wants to retain average or a realistic amount would be 10%. A rolling reserve of 10% means that they're going to keep $10,000 in a sort of holding account, and they're going to deposit money on a rolling reserve, anything that comes over the top or in excess of that 10,000 that they're always going to reserve. And the purpose of that is just to have money on hand if chargebacks come through. And it's a risk mitigation process or strategy that the bank will use. But if you're willing to accept that, if those are the terms that you can get, a rolling reserve is a very common thing in high-risk merchant accounts. Number 8 is fixed processing limits. So you might get approved with all of the other variables I've been talking about, but you might have a cap because, again, risk just decides that the exposure and the card types and the way that you're processing will only allow for a max of, let's say, $50,000. That once you hit that, the payment gateways are going to turn off essentially, or that you're not going to get approvals anymore because you've hit your monthly cap. Number 9 is that chargeback history matters. If you have a history of chargebacks or you anticipate a large number of transactions because you're in telemedicine or you're in a call center environment, I get that question all the time or that statement all the time where, you know, there is an expectation of greater than 1% of volume is going to come through as chargebacks. So that will matter if you have chargebacks, as you'll hear me say in just a second when I cover the next part, which is the application requirements. They are going to ask what your chargeback history is. Underwriting's going to require that. So that's something to keep in mind up front. Volunteer that information, let them know up front, because it's always better to present all the information and get that stable and solid merchant account. Number 10 is that terms can change. This can be a good or bad thing. So terms can change favorably if you have a rolling reserve, as I talked about. That can change over time as you establish more history and good credit and low chargebacks, good successful payment of fees, and just general good credit of the merchant account in general. As time goes along, the bank may be willing to release that rolling reserve and just eliminate it on your account. They usually will require at least 6 months to a year of established history. There's variations to that or exceptions to that, so it could come sooner and it could take longer. By contrast to that, terms can change for the worse as well if you've set up your business one way and then as you have an established history, if you change policies or start selling different products that are still under the approved guidelines, if you start to get more chargebacks or start doing things that are going to jeopardize your merchant account and you get more chargebacks or fraud or whatever, the merchant account could hold your money. They could freeze funds, just like what would happen with PayPal and Stripe. Banks will still do that because it's all risk exposure that are tied to all of these underwriting guidelines and elements that I've been talking about in these high-risk merchant account category videos. So keeping in mind those 10 things when you're putting your merchant account packet together and you're working with a company to apply for your high-risk merchant account, these are actually the things that you will supply, that the bank will likely ask you for right up front, so you can start preparing them now. And these are pretty common. There's variations, little tweaks here or there based on who exactly you're applying with, but these are pretty common. So you're going to have the application information like address, social security number, tax ID number, ownership information, home address of the signer of the business, monthly volume, average ticket, number of years in business. And those are the things that they're going to ask for on the merchant account, as well as the history of, if you've had merchant account before, whether you've been shut down, whether you've had chargebacks and so forth. Those will be little checkbox on the application. In addition, here's the information that you'll be required to submit: bank statements, merchant account processing statements if you're converting from an existing account to a new one. They'll ask for that history, oftentimes 3 months of bank statements and merchant account processing statements. They'll ask for a voided check or a bank letter. They'll ask for a verifiable address. Of course, that should be obvious, but sometimes it's not provided, where you can actually verify if you have a building or an office, whether it's a home office or virtual, that doesn't matter. It just has to verify with where you have your company registered. Profit and loss statements, balance sheets, IRS form SS4, and then finally any other items that are at the discretion of the person that's actually underwriting at the bank that you've applied with. So again, those are the things that you're going to want to take into consideration, keep in mind, and bring up to the person that you're working with, the company, the sales office, the individual, when you're applying for the high-risk merchant account. So as I said in my other video in this series, you can watch the other videos that are on chargebacks, fraud prevention, and I'll link those up in the description, and they'll be on the screen as well. So you can continue to do research on proper application submission and everything like that. And then you can also just scroll right down and book a call or an appointment. This is a complimentary appointment that you can schedule with me, and I'll walk you through everything. That we can have an open dialogue about what's best for you, and I can give you suggestions. So if you want that, feel free to take advantage. I do open up my calendar for appointments based on my availability. So that's it for now. Thanks for watching. As usual, if you like this video, give me a thumbs up if you don't mind. It really helps these videos get found, and it helps come up when people search for this type of information. Share this video with your friend, and subscribe and hit the little bell notification if you want updates and you want to get a notification when I release new videos like this. Thank you again for watching. I appreciate it. Until next time, I'm Brian Manning, and have a great day.